So we're recording now, and people will come in or not come in or whatever. I think maybe next week, Tuesday night might be better than, oh no, what were the times we said? Um, the possible times. Oh, it was most people were available either Monday night or Wednesday night, right? So Monday night or Wednesday, maybe next week, Monday might be better for me. I don't know if you guys have do you care?
No, it's okay.
Monday's good. Then we could start the week with trading. It's a good way to start the week. So I have some stuff prepared. I mean, today we're just kind of going to get started to make sure you kind of have the right tools. So it is good, I guess, that we are recording this. So let me share my screen. So this is not what we're going to do today. This is more than just today. But here's some things I want to talk about that we'll, do today. So let me make this a little bigger. Okay, so today we'll do an introduction, and maybe we'll get to other stuff. I want to make sure we talk about your plan for trading, like what it means, what we're trying to do here in this club. Then we'll talk about how do you actually trade? Like, what does that mean? If you haven't traded before, how do you trade? What's the difference between using an exchange or paper trading? Then probably, not today, but we'll get into the big stuff, which is like analyzing the market. And you can analyze the market in a macro or a micro environment. Macro is like looking at, looking at countries, looking at gold, looking at oil, looking at the Dow Jones, looking at the VIX, looking at looking at the Dixie, which is the dollar, the US dollar, looking at different currencies. Like you can look at the whole world. And that's useful. It's important to know, not necessarily just for what stock should I buy, but for things like seasonal markets. So there's some markets that are always more busy in the summer. Like for example, corn and wheat are always going to be more busy during the harvest season. And that's seasonal. Oil, heating oil, it's a lot more busy during the winter, of course, because that's when people are using heating oil. So there are a lot of different things that are seasonal. And to understand the sort of big market, you'd want to know what are the different seasons for things. But mostly what we're going to be talking about is like, we are small investors. We're retail. That's what you would call us. We're retail. Sometimes we're also called the dumb money because we are not the smart money. The smart money is like hedge funds and big insurance companies, the people who we're dumb money, but we want to know what the smart money is doing because we could do what they're doing. Then we'll talk about things like, this is obviously in the future, money flows are really important, different cycles. And these are all examples of things you can look at on a chart. And we'll get to that today, like what is a chart. But all of these lines, like the put-call ratio or the bullish percentage index or the overbought, oversold, or the greed fear cycle, like all of these tell us what's going on in the markets in general. So, in this trading club, one of the things I do want to do today is just talk about your personal goals. Like that's pretty important to me. What is it you're trying to achieve? But, because some people don't care about the big market. They just want to know how to make some money. And that's fine. Risk management is really important. I should probably put that higher up on the list. Well, there are different kinds of analysis. There's bottom up and top down. and we'll kind of learn both of those. We'll talk about screeners, which are very important. So here are 4 examples of screeners, but what that means is when people want to buy stocks, a lot of times they don't know how to get started. I mean, there are thousands of stocks. It's like, where do you even begin? You could start with, like, some people say, like, think of a product that you use. Oh, you use Apple? Well, think about that. Oh, you use, L'Oreal? Oh, think about that. It's like, yeah, okay, but that doesn't really tell you much about what company is good or bad. A screener, think of like a screen for your window. Like if you open the window and you have a screen, then bugs can't come in, right? A screen is something that filters the air from the bugs. That's a screen. And in stocks, we also have screens where it filters the kind of stock you're looking for from all of the thousands of other stocks. It's really important to have these screens. A screen is like a filter. So you put this filter on, and if you look at 10,000 companies, maybe only 200 companies come out of the filter. And that's more reasonable. So we want to understand how to use these filters. Filters are a really important part of stock trading. But of course, you don't know what you're looking for at the beginning. We'll talk about growth versus value investing. I'm more of a growth investor, but value investing I think is safer. And we'll talk about the fundamental indicators, which is like when you're looking at a stock, what are the price to earnings, the price to book value, the price to book, the book to share, the cash to share, all of these things that help us look at a company and understand if it's a financially good company, if it's a good investment. And here's some stuff we'll probably get more into actually today. So I don't know why it's so far down on the list, but these things are really important to me: support and resistance, SMAs and EMAs, Fibonacci levels, and different indicators. So let's kind of go back to the beginning and talk a little about what we'll do in this club. So I want us to meet every week, so that's my goal, is that we're meeting once a week. And my goal is, look, I'm not a professional trader. I have probably 3 years of experience, and most of that time I was taking courses. So it's not like I've been trading successfully 3 years, but I have traded. My portfolio is not huge. I didn't start with a lot of money at all, but I will say it's up 1,000%. So the portfolio's done well. 1,000% is considered to be a 10x, right? It's important that sometimes we talk about x's. So 2x would be 2 times, right? So if you start with $500, for example, a 2x equals 1,000. If you start with 500, then a 4x is 2,000, right? So we want to be able to think about x's and how much you're going to increase your portfolio. So I did create an email for us. So this is our email right now, ciptradingclub@gmail.com. The password for this email is let's make money for you. And what I'm going to do, the reason that I think we need this is, like, I can email you this sheet, but more importantly, I have videos, like courses that I paid for, that I can send you the videos. Now, some of the videos I'll send you, I'm going to start by sending a course, one video a week or maybe 2 a week, called Jason Casper. And this is a guy who I like right now. I follow him. The only problem with his course is that he uses a very certain indicator called Market Cipher that you have to pay for. Now, I've paid for it. I would not ask you to. I do not think you should. I want to teach you how to build it yourself. So Market Cipher, and I'll show you what I mean in a minute on the chart, but this indicator is actually built from like 3 or 4 other indicators that he just puts on top of each other. And it looks nice, but you don't need it. You don't need to buy it. You can build it yourself. And the only reason I bought it is I already know how to build it myself. And I like I think it's pretty. I think it's easy to use. Not that I've used it that much. I just bought it not long ago, but I'm still learning. But like, if you don't know how to build it yourself, I wouldn't say anybody should, you shouldn't buy it unless you know how to build it yourself first, or else it's easy to get cheated. That's another really important thing to say is like, I trade mostly these days, I trade mostly crypto. And we'll talk about that in a second, like the different things to trade. But I trade crypto, which is like Bitcoin, Ethereum, all these other coins. That's what I trade these days because there's more volatility. Volatility is really important. Volatility is how much something goes up and down. So gold doesn't have too much volatility. Gold is, the price is pretty stable. It goes up, it goes down, but it's pretty stable. Some things are really stable, like the Dow Jones. That's the American, the group of stocks that represents the American economy. That's stable. If you want to make money, though, stable is good for long term. If you want to put in $20 a week or $100 a month or something into a very stable thing for your retirement, that's great. You're in your, young 20s. You could start now, and by the time you're 60, you'll have lots of money saved. That's investing. This is not an investing club. This is a trading club. And for trading, we want the price to go up and down because we want to be able to buy it at the bottom and sell it at the top. Or short, which means sell it at the top and then buy it again at the bottom. We want to be able to long and short. So if the price isn't going up and down, that's not great for us. You can't make any money. So volatility is good, although it's not good if you're an investor. If you go today and buy one Bitcoin and you're like, oh my God, I have one Bitcoin, it's worth 30,000. And then 10 minutes later, you're like, it's worth 40,000. And a half an hour later, you're like, it's worth 7,000. I mean, that's not good. If you're an investor, to have your investment be going up and down is not good. But for trading, it's great because we're trying to get in, get out, get in, get out. There are different kinds of trading. I am a swing trader. So generally, there's day trading, swing trading, and long term. I'm a swing trader, which means most of my trades will last more than 12 hours, but less than 2 weeks. That's swing. So if I make a trade, a day trader, you expect to finish your trade by the end of today. So you're looking at 1 minute charts or 3 minute charts. I don't. I look at like a 4-hour chart, and I'll explain that in a minute. But you can trade however you want. The strategies we'll talk about work for all of them. We'll talk about TA and FA. Those are the kind of the two ways to look at the market or to look at stocks or coins or commodities or equities or bonds or futures or options or whatever it is you're trading. There's TA and FA. Let me explain those, and then let's talk about personal goals. So TA, I don't know. I don't want to tell you guys stuff you already know, but do you guys know this? What is TA? What is FA?
I think you told us last time, but I don't remember.
Yeah, probably. So technical analysis versus fundamental analysis. These are really important. What we're going to do together, we'll do both of them. But I'm more of a technical analyst. Well, that's not true. I like both of them. So the example I heard, which I thought was a good example, is imagine that you and your friend are sitting in a shopping mall. So let's say that Ayana and Constance, you're sitting in a shopping mall and you're deciding where to invest your money. There's all these stores in the shopping mall and you're going to invest in one of these stores, one of these businesses. and you're trying to decide which one should you invest in. Now, let's say Ayana, you're TA, and Constance, you're FA. Now for FA, Constance, let's say she's going to go into every single store that she's thinking about investing. She'll go into the Prada store and she'll look at their bags and look at their shoes and look at their products. Is it good leather? Is the stitching nice? Does it look good? She'll go into another store and she'll look at their clothes. She'll go into another store. She'll look at what they sell. She'll touch it. She'll see it. Is it good quality? She's making her investment decision based on the quality of the goods. That's what matters for fundamental analysis. Fundamental analysis is about quality. You're investing in a company that you think is high quality. Now let's take the other hand, Ayana. Ayana is sitting at the shopping mall and you're watching people. You don't care what these stores sell. You're watching people go in and out of the stores. And you see a lot of people are going to shop at that store. So you're going to invest in that store. It doesn't matter, is it good quality? Who cares? It doesn't matter if it's good quality. What matters is how many people are buying it. Because if they're doing a lot of business, they're going to make money. Maybe it's high quality, maybe it's not. Who cares? These are very different ways to look at the market, to think about what stock do I want to buy. Anais, are you there?
Sir?
Yeah.
Oh, hey. Can you
Sir,
turn on your camera? Yeah, Constance, you have a question?
For technical analysis, are you like researching why people are choosing this, or you just going where people are?
Nope, doesn't matter why.
Okay.
You know, I mean, sure, you always want to look at both. So, for example, recently, just yesterday, the price of Bitcoin went up $10,000. And that went up $10,000 because there was some news, which supposedly isn't even true, but it doesn't matter. The news was Amazon has some advertisements out that they're going to hire people who work with Bitcoin. And everybody said, oh my God, that means Amazon will accept Bitcoin in the future. Oh my God, I need to buy Bitcoin. And the price went up. That is fundamental. Because there's a reason, there's a why. Technical, like my first teacher, Brian, was a technical analyst. He would often buy stocks. He didn't even know what the company sold. I'd say to him, like, why'd you buy this stock? And he's like, look at the chart. You see these lines and this. And I was like, but what does the company do? He's like, I don't know. And I was like, you don't know what the company does that you just bought? And he's like, no, I don't care. He's like, maybe they sell telephones, maybe they sell diamond rings. I don't care. Who cares? That's technical. You know, it's not fundamental at all, but it works. Now, a lot of people say technical analysis is BS. That is not real. But the fact is, if a lot of people use it, it's real. I mean, it's the same thing if I say, like, how much is this diamond ring worth? Well, if everybody will pay $100,000, then I guess it's worth $100,000. It doesn't matter. You know, if everybody uses technical analysis, which they do on Wall Street, then it's real. So it's real. Okay, so I want to talk about your goals. I mean, I know there's only 3 of you here, but that's fine. I want to talk about what you want to achieve out of this, and then we'll start with making sure you can use TradingView and starting the plan. So let's just kind of go around. Ayana, what is it you want to achieve?
Honestly, I want to understand how it works because if 2 or 3 years ago, I didn't hear it like being popular, but now even some of my friends, they do it somehow. And some of them say that it's super hard to learn.
You mean trading in general?
Exactly, yeah, trading in general. so I really wanted to understand how it works and if I can apply it. I mean, later. Yeah, that
Sure.
would be.
So your goal is more right now knowledge?
Yeah, yeah.
Okay. Okay, cool. Constance.
I want to be able to find like markers, like how could I explain that? Because everyone is like trading and it like reflects, it kind of reflects, or you can predict like what's gonna happen, or like if this happened like there, like it's gonna have an influence on that. And I want to be able to like, I don't know if I'm clear or not, but I just want to know
Why
markers
do you want to do that?
because I want to know what's gonna happen. Like in general, I want to understand like how things work, like human behavior also. I think it's a good reflection of it, like trading.
Do you want to make money?
Also, yes.
Okay.
By playing on that.
Yeah. I mean, it took me a long time. You know, it's funny. It took me a long time to admit that I want to make money. And
I know,
for
I know.
for like a year, I would tell people I'm interested in human behavior. And finally, I admitted I also just want to make money. I mean, I have to admit, like,
Out.
Both
You're
are
being called
related.
out for both.
it's hard to admit greed is not a good thing, you know. And there's this viewpoint that we have in the world, which is like you should go to school and get a job, and that's how you earn money. And anything else, either your parents give you money, you're a trust fund baby, everything else is bad.
As
Go to
ours.
work, earn money, that's good. Everything else is cheating or gambling. And it took me years. Now, I'm not saying I don't love learning about humans. One of the first things that I learned in trading is this beautiful to me idea that so I study organizational behavior. I love to study psychology and learn about people and stuff like that. And if you look at a chart, so when I say a chart, let's start on that. To do trading, we need to use this program, TradingView. That's the program that everybody uses. And I mean everybody. I mean Wall Street, I mean hedge funds. It's free. Now, I pay for it, so I get more, I can do more with it. I'll put it on so you can see it. But all of you must get a subscription to this. Not paid, just free, but you have to log in. So if you're at a computer, I would say do that right now. It's going to be easier if you can. This is the course I'm going to be sending you, video by video, the Jason Casper course. Now, he trades crypto, but it doesn't really matter. It's all the same thing. So he teaches support and resistance first, marking levels, VPVR, moving averages, Fibonacci. Like this is pretty much the order we're going to go. Market Cipher, I'll teach you rather than using his. And we'll do some of this stuff earlier, like risk management is very important. I don't know why he put it at the end. Or trading psychology is very important. But these are the videos I'll be sending you. So TradingView is the program everybody uses. So you just log in, you go to chart. And this is what TradingView looks like. Let me make it a different chart so it's a little easier to read. Let's do a new chart. Let's start with the Dow Jones. Okay. So here's what TradingView looks like when you start. This is what you get. You get lines, or candles, they're called. I will adjust these. Candles. You can put them, these are the ways you can look at them. The two that people use is pretty much they use lines, or they use what's called candles. Those are the two. I think candles are a lot better. And so this is, I know this is stuff we talked about before, but like today is our first real trading club meeting. So we'll, start from here and try to understand all this stuff. On the right side is kind of your list, and you can make lists by colors. If you want to add something to a list, let's say you're looking at this, you just click this little flag here and you can add what color you want it to be, and it'll just put it in your colors list. Or you can create a new list. So let's create a new list. Let's call our list TRI Trading Club. Okay, and then your lists get saved over here, and I have lots and lots of lists of things I look at. But let's look at, I think I have 2 of these trading club things. TRI Trading Club, nope, only 1. So we don't have anything in there yet. But this will be our trading club list. If you want to add a stock, you just click on the plus. And then you can type in whatever the name of the stock is or the whatever. So that's TradingView right now. Now there's lots of stuff you can do with this, and I'll teach you how to use it. Pretty much the basic things is to be able to, first of all, look at time. So these are candles. That's what these are called. They're green candles and red candles. And of course, you can change the colors if you want, but traditionally, they're green and red candles. Green means the price went up. The price started here and it went up. Red means the price went down. It started here and then it went down. Now, what does each candle represent? Each candle represents a period of time. Now, if you go to this little arrow, this caret on top, it's called, you'll see, time interval. So let's say you go to, I have a lot of them chosen, but you don't need a lot. Let's say we go to 1 week. Now, each of these candles represents 1 week. So you can see the date on the bottom. The week of March 23rd, 2020, the Dow Jones Industrial Average Index. Now, what is the Dow Jones? Any of you guys know?
Isn't it like the thing that represents like how America's doing?
Yes.
Okay.
The Dow Jones is an average. It's an index of different stock markets. By the way, we'll look at Investopedia a lot. Investopedia is a good website. It's Wikipedia for investing. So the Dow Jones is a group of stocks. Apple, Facebook, all of these different stocks that kind of represent the American market. We call it a basket, like a basket of stocks. It was created in 1882 by this guy named Charles Dow and Edward Jones. So we call it Dow Jones. Let me see if they'll tell us which stocks are in it. Here they are. So these are the stocks. It's not many. The Dow Jones, which measures the American economy, is these companies: 3M, American Express, Apple, Boeing, Caterpillar, Chevron, Coca-Cola, Goldman Sachs, Home Depot, Johnson & Johnson, McDonald's, Nike, Microsoft. I mean, this is it. There's only like 10 of them. Sorry?
Isn't that low-key misleading?
Very.
Okay.
Very, very misleading. Yeah. That's one of the things about trading. So Ayana, you make a good point. People say trading is hard. The market is full of confusing data and manipulated numbers. And if you're really trying to understand, like, it can be hard. What I'm trying to do with the market is 2 things. One, I think these charts are pretty. And the reason I think they're pretty, let's look instead of Dow Jones, let's look at gold. Just the price of gold. This is the price of gold. Remember, we're on a week, W. So every candle is 1 week. So the price of gold right now is, $17.98 per ounce. Now, this would be if you bought gold, the metal gold, but most of you are not going to go out and buy the metal gold. What you would maybe buy is this, the Barrick Gold Corporation, or whatever your country has that's similar. This is a company, and what this company does is they buy gold, and then they put the gold into a vault in Switzerland. That's what they do. They own gold. There's a bunch of companies that do this. There's lots and lots of companies. Barrick is a pretty famous one. So here's the price of gold. Now, you could buy 1 share of Barrick for $21.12. So it's not that expensive. What we want to know for trading is that a good price? And the thing about trading, it's not very complicated as long as you have a plan. Now, they say 95% of traders lose money. 95%. Most people lose money because they don't have a plan or they break their plan. So it's really important to have a plan. So going back to what I said, I think there are 2 things I care about with trading. One, I'm very interested in, like you guys said, human behavior. Oh, I think I never even asked Anais what you want out of this. Anais, what do you want out of this?
Kind of the same as Ayana, just kind of learn a little bit more how to trade. I'm also very interested in obviously what we talked about, how people behave, but yeah, so learning and making money.
Okay. My goal, by the way, for making money was, I'm 45 now. Well, I'm 46 now, but I was 45 when I started doing this. And I started studying this when I was around 42. And my goal is by the time I'm 65, so 20 years, I want to be able to earn like $3,000 a month. Just to be able, like, if I ever want to retire, I think these days jobs are unpredictable. I always want to do what I love, and I'm very grateful I get to. I love being a teacher. I love doing theater. I get to do what I love. But you can't necessarily retire on doing what you love. So I want this another source of income. I'm not trying to get rich. I'm not trying to make $10,000 a month. I'm trying to make a reasonable amount of money every month. And I'm giving myself 20 years to do that. I think that's a great kind of strategy. You have to think about what is it you want. People who want to get rich quick lose their money. Like, there's no question about that, because they take risks. I take some risks, but so what does this chart represent? What are these candles? Like, here's a big red candle where the price went from $20 all the way down. Now, these candles have these little lines also. Those are called wicks and tails. So if we look at a candle like this green candle, price wicked up to $28.50. That was the highest price this week, because we're looking at a 1 week chart. In this week, the highest price of this stock was $28.40, but that wasn't the price at the end of the week. At the end of the week, it's where the candle closes, where the candle ends, and that was $27.07. This price, for example, over here, this week started, the week of August 2020, started at $29.25. The price went all the way down to the tail, $25.96, but it didn't stop there. It went back up, and the week ended at $26.91. Now, it's really important that we start by looking at weeks. We always want to start by looking at weeks or maybe even months. Then we might look at day. Now, here's gold on the day chart. And this is actually a really good example of something, but this is gold on the day chart. And you see the price went from 1865, this was on February 26th, all the way up to 25.26. 2023, which was on May 14th. So from February to May, late February to mid-May. From February to May, there was a really big buying opportunity here. And the question is, how would someone know that? Right? How would you know when the price is at that level that it's a good buying opportunity? Looking at the day, it looks like this price is very low, right? 1858. But if you go back and look at the week, you can't even tell what's what. I mean, down here, the price was $7, $6, $5. You can't tell. You know, what looked like, you know, when we talk about the daily chart, and what looked like on the daily chart, I say, oh, you could have bought it here in February and sold it here in May. If you pull out means look at more time. And I'm just using my mouse to scroll down. That's how you pull out. So if you pull out, what I said was like a big opportunity. It's not that big an opportunity. In the whole market, it was much higher, it was much lower, it was much, much lower. How would anybody know I should buy here? How would you know that? You know, because you could think, if you look at this chart, well, why would I buy here? The price is going to go down to here. Or the price is going to go down to here. It's so not safe. But if somebody knows what to look for, then they understand how to buy here. So one thing we want to do is slowly understand this idea of like, how do you determine when, what they say in trading is, it doesn't matter how high or how low the price goes. The only thing that matters really is when it changes direction. If you could have seen that right here it was going to change direction, you could have made money. If you could have seen that right here it was going to change direction, you could have made money. It's all about when the price changes direction. Now, if you got in over here, well then cool, you just keep going up. If you got in over on the left is where you draw things. So the left is for lines. You can do a trend line or a horizontal line or a horizontal ray. Those are the big ones we'll be using. So a horizontal line, you just click it and you get a line. Now, every one of these things can be customized and changed. So when you click the line, you will get some sort of menu bar that looks like this. And over time, I'm going to teach you what all of this means. But the only thing for now to play with is if you want to play with the color, because you can change the line and make it any color you want. You can also play with the thickness. Maybe you want a thick line. And you can play with, is it a straight line or a dotted line or a dashed line? So, and then if you like it, let's say I like this dotted yellow line, then you save drawing template as. So I've saved lots of them for different lines I like to use. So if I wanted to save this, I would just do, let's see, I'll call it a dotted yellow line. So you want to be able to have lines. Lines are really important. That's a straight line. We're also going to use a ray. A ray is a line that starts at a certain point. It doesn't go forever in both directions. And again, you can change the color if you want. Let's make this one blue and let's make this one a straight line. So rays are also really, really important because we want to make lines off of certain places. And then the third thing we'll use at the beginning is a trend line. A trend line is a diagonal line. And those are really important too. Because we want to be able to take a diagonal line, for example, and we want to be able to take it from, let's say, a bottom point and move it through another bottom point. I mean, here's a pretty good example. This trend line, now right now, if you want to move around this chart, right now my chart is set to auto on the bottom right. If I take it off of auto, then I can move the chart. But, you know, the time won't change. I could just move the chart like this if I, for example, want to see this line down here. If I move it, let's say I'm looking at it like this. If I click auto again, it'll put me back to the original shot. So you can always scrolling left, and I'm just using the mouse and clicking it and dragging it left. Or you can use your arrow button. That's very, very slow. But you can scroll left, and that'll take you backwards in time. So here's a Barrick Gold Company in 2003. You know, how far back can we go? Let's look at a monthly chart. Let's see what we get. Okay, so the Barrick Gold Company started in 1986. And this is what the whole history of this company looks like from 1986 all the way to 2021. So the price, you know, it's gone up and down. And so one thing we want to know is, how do we draw these lines? How do we figure out what's a good price? You know, you can spend a lot of time just analyzing this stuff. You don't have to buy it. In fact, my first teacher made us do 100 practice trades before we could trade money. Nobody actually did it, but he wanted us to. I did like 10, you know, and then I started trading money, but I followed my rule. So let's talk about rules for a second. There are 2 rules. That's it. There are only 2 rules. Number 1, never. And these are rules you can break if you want to. I break them sometimes, but these are the rules. Number 1, never trade more than 5% of your capital. Now, I started trading with $100. So if I started trading with $100, then how much money could I use per trade? $5. So I never put more than $5 on any trade. Now, in the past, you couldn't do that. When I say the past, I mean like 10 years ago. Because 10 years ago, it cost a lot more than $5 to buy stock. Buying stock and selling stock was quite expensive. It cost like $30 to make a trade. However, because of Robinhood, you know Robinhood? So Robinhood is a telephone app. Be careful of it. But it has gamified trading. It's the gamification of trading. So Robinhood is an app where it's the stock market. You can trade and buy and sell stocks, but they've made it really fun for young people, for the TikTok generation, like you guys, the Zoomers. And Robinhood is a great place to trade. When I say be careful, I don't mean don't use it. It's a great place to trade stocks. And it makes it fun. You click the button to buy and it gives you balloons and celebration. I mean, it's fun. And it's free. And now, because of that, all the websites are free to buy and sell stock. So you totally can buy $5 of stock. So when I started, I never would have bought this company because it cost $20. And I wasn't going to buy a $20 stock. I would buy a $5 stock. You know, and the reason is, what we want to be able to do is, you know, this looks right here like a pretty good trade, right? Let's say you got in here and it's been going up. But if you look at the bigger view, that's not anything. So one of the cool things about trading, the psychology of trading, is that it's like life, in the sense that sometimes you think your life is going up and down. Oh my God, my life is so crazy and everything's happening to me and this is happening and I got to go to school and I got to do my work and I got so much going on and I'm starting a relationship and whatever. But the fact is, that's like looking at your life on a 5-second, or let's make it a 1 minute. If you look at things on a 1 minute chart, oh my God, this goes up and it goes down. It goes, oh my God, it's so far up. It goes down, it goes up, it goes down. Like there's so much movement. But if you look back in terms of your life, that changes nothing. Like in terms of the big picture, it's nothing. It's tiny movements. So you can look at the big picture, you can look at the small picture, you can make money either way. But there's another thing that this chart represents. This chart represents millions of people, millions and millions of people. But it boils the people down to two things: buy and sell. It really takes away, and I really like this about it, it takes away personality, race, age, gender, disability, orientation. None of that matters. The only thing that matters is buy and sell. So what you're looking at here, you're looking at a cross-section of humanity. You're looking at a group of humans who believe in gold. That's what you're looking at. You're not looking at their age or their race or their gender or their orientation or their color or anything. You're just looking at a group of people who believe in this asset. And that's a really interesting way to look at humans. And I like that a lot because, you know, the world is so fractured these days. Everybody's fighting about everything. But here, it's a very different way to look at people. So I like that. So I explained what these candles are. The red is falling price. The green is rising price. This space is called a gap. Gaps are really important, but it means that right now we're looking at the day. So each candle is one day. So here, the price on this day started here. It started at 22.82 because that's the beginning of the candle. That's the top of the candle. So let's make a horizontal line, make it nice and big from the top of the candle. That's where the price began. Let me make that straight line. Okay, that's where the price began. Then the price went all the way up a little bit, but it didn't stay there. It fell down, and the price ended at this price right here. That was what we call the price action for that day. It went all the way up. It started at 22.83, then it went up, and then it closed at 22.45. But maybe some bad news came out. Maybe there was bad news about the economy. Something happened because the very next day, the price opened. It started. The opening price was 21.79. Now, how is that possible? That's because, and here's another thing that can confuse people. The market, like the New York Stock Exchange, is open from 9 o'clock to 4 o'clock. But there's something called after hours trading, where the big companies, not you and me, we're retail, we're dumb money, but the big companies, they trade at night also, and we are not allowed to. It's unfair. But big companies are allowed to trade at night. And so they trade, and the next day the price opens somewhere else. So the next day the price had fallen. So it's important to understand gaps happen all the time. So let's see how we get rid of these. I'm going to clear all these lines. Okay. So there's lots of stuff on here that I don't know how to use. You know, this is a really interesting program that can do all kinds of things. You don't need to know a lot of stuff, but like fundamental metrics for stocks, oh my God. There's so many things here if you were a financial person that you could learn about stocks. And it's so useful. I mean, this is all free. It's everything you could ever want to know about a company. It's really amazing. But the first thing is for all of you to get a TradingView account, to make sure you have one, and to, write down our Gmail address so I can send you videos and stuff. So the first rule of trading, never spend more than 5% of your capital. Lots of people, that's one of the big reasons people lose money, is they have $100 and they bet 50. And then they lose 50. So then they bet 30 and then they lose 30 and then they're just, that's it. You can't do that. You have to make small successes over time. That's another thing about trading that's similar to life. You want to make small successes over time. That's how you get rich. You don't get rich by taking a giant gamble. You get successful. I shouldn't say rich. You can successfully make money steadily for the rest of your life if you're making small trades. If you follow rule number 2, which is have a 66% edge. And that means you have a plan. And you follow your plan, and your plan wins more than 50% of the time. Now, my first teacher told me, if you can win 60% of the time, that's not very much, that's losing 4 out of 10 trades. But if you can win 60% of the time, any place on Wall Street would hire you. Because people on Wall Street lose 50% of the time. So how is that possible that you can make money but lose 50% of the time? And this is one of the big ways, when you say trading is complicated. Here's one of the big reasons people think trading is complicated. They think, let's say we want to buy this stock, the Barrick Gold Company. They think, I want to buy it, let's say here. So we want to buy it, let's say today, the price is, let's buy it here, okay? So the price today is $21.11, and we're going to buy it here at this price, and we think it's going to go up. Now, if you want the stock to go up, you want to get 100% gain, you want to do really well, you want to make 100%. Let's say we're going to put in $100. So we're going to buy, or a little more, we'll buy 5 shares of stock. Now, we can use TradingView not to help us buy, but to help us study this. And I'll show you how in a second. But we want to buy 5 shares. So you can also draw on TradingView. So I'll use like a brush. We want to buy 5 terrible looking. We want to buy 5 shares. That was the worst way I could have done that. Let me fix that. Here, I'll use the arrow backwards is to take away what you just did. And instead, I'll use a text box. So let's buy 5 shares of Barrick at 21.12. Now you can use these little text boxes, or another really cool thing is you can use these, they call it a like a balloon or a call out. A balloon, like, let's see, buy 5 shares. It looks like a little balloon, and you can move it around. I don't want the balloon anymore. Go away. Okay, let's buy 5 shares of Barrick stock at this price. Now we want to make 100% gain. So Ayana, if we want to make 100% and we buy it at 21.12, well now it's 21.14, but we buy it at 21.12, what price do we need it to go to make 100% gain?
$100% out of what?
We're going to buy 5 shares. So we're using $100 and we want to get $200. You want to double your money.
Mm-hmm.
So if you buy 5 shares of this stock and you want to double your money, right now the price is $21.12. How would you double your money? No? Any ideas, anybody? Well, the easiest way, look, let's say I bought 5 shares at this price, $21.12. And then later, let's say tomorrow, the price goes all the way up. Now you can see I'm on the right side of the screen scrolling up and down. That's how you control the price. Let's say it goes the price tomorrow goes all the way up to 42. And I sell it at 42. I've doubled my money, right? You buy 1 share at $21, you sell it at $42, you doubled your money. But how likely is this? It's not very likely. If you look at the history, we're looking at the daily chart. When's the last time that happened? I would have to go to the weekly. Let me try the 2-day chart. When is the last time that happened? Was 2012. 2012 was the last time it went to that price. So how could you possibly think that right now it's going to go to this price when it never does? Not for 10 years. According to this, it looks like it might go lower. It might go to $5 before it goes to $40. And that's one of the reasons people lose money, is this logic is all wrong. Oh, wait. Hold on a second. I'm getting a voice call. Okay, so this logic is all wrong. Today we won't do 2 hours. We'll do like another 30 minutes because I know it's a lot of information. Okay, this logic is why people lose money and why the smart money, like Wall Street, makes money. So we don't want the price to go to 42. That's ridiculous. We're going to buy 5 shares of Barrick at $21.12. Now, you go down here on the left to what's called a long position. Long means you think the price is going to go up. Short means you think the price is going to go down. Those are the 2 basic ways to buy things, long and short. I almost never short. I only really long. I buy things that I think are going to go up. So we're going to buy it at this price. And here's what you get. You get this chart with green and red. And the really important thing about this chart, there's a couple important things, but there's really 2 important numbers here. One is the number 1 right in the middle. That's really important. And 2 is this number in parentheses, 24.29%. That's important. Now, let's make this bigger. Right now we're on a 2-day. Let's put this on a 1-day. Start again. Make this bigger. Okay. Now, we're going to buy it at this price. Let's buy it at this price. There we are. Okay. Now, we see our 1. Here it says 3.27. We don't want this to be 1. We want this to be at least 2. How do you do that? You move your green line up. So now it's at, let's say, right, okay, 1.99 or 2. Let me get it closer. Okay. Now, For us to make a 100% increase in money, to double our money, the price doesn't need to go to $42. The price needs to go to $22.48. It was there on June 16th. That is how we double our money. But the reason that we double our money this way is, to do this, you can't just buy one share or two shares. You have to buy more. But you're not risking more. So let's say we move, okay, now this level up here is called our take profit. It's sometimes called TP. This is our take profit level. If the price gets to this level, we will sell. Maybe not everything, but we'll sell something. We'll take profit. This level over here is called stop loss. Sorry, this level down here. If the price gets to this level, we will sell. People lose money because they trade without these two things. That's a big reason people lose money. Because people will buy this stock and think it's going to go up. I hope it goes up. I believe it'll go up. But they don't have a plan for when they're going to sell it if it doesn't go up. Now, yeah.
At the two numbers, like the take profit and the stop loss. I mean.
Say that again.
So do we sell every time we reach take profit or stop loss?
Well, when it hits the stop loss, you're out. You sell everything because you're losing money. When it hits the take profit, many people would say sell half. Don't sell it all because it might keep going up, but sell half, because then whatever money you invested, you take out. And now the rest of your money is the market's money. It's not your money. Always take your money out. The number one rule in trading is called preservation of capital. Preserve your money. My teacher would always say, just make sure you can come back and play tomorrow. Don't lose your money. You know, learn how to do this. This takes months or years to learn. Depends how focused you are and what techniques you're learning. But let's say for us, this might take 3 to 6 months to learn how to plan a trade and make money. Because you can't learn it today. Today is more like vocabulary and stuff. But let's say it takes 3 to 6 months to plan a trade. You want to be able to trade for years. You can start with $100. You could start with $10. It doesn't matter. Lots of stocks cost, pennies. So here's the key is you can adjust these things. I moved the take profit up. What if I want to make more money? How about I move the stop loss up all the way here? Let's move the stop loss up to here. Now, I have moved my stop loss. What does this mean? I'm going to buy this stock. Wait, can you hear me?
Yes, yes.
I think my earphones are running out of batteries. 1111, make a wish. Yeah, my AirPods only have a little bit of batteries left. Okay, so I'm going to buy this stock at $21.12. If it goes down to $21.11, 1 cent, I'll sell. Now, why would I do that? Well, there's two reasons, really. Number one, I think it's going to go up. I don't need to put it all the way down here, you know. I don't need to put my stop loss down at $19. I don't think it's going to go to $19. And anyway, you never make a trade that's under a 2 here. That's how Wall Street makes a lot of money. You know, people who are buying, like just buying stock, they often are using a really low number. Wall Street is doing something like this. Every trade they expect to make 400%. That's a 400% trade. You can move the stop loss even higher. Now, if this price, I'm going to buy it at $21.10, or we were going to buy it at $21.11. If the price goes down to, there. If the price goes down to $20.99, we've adjusted our stop loss. So let's say I think the price is going to go up. So I buy it here. And I don't want to risk much money at all. I don't want to lose much. Now, if I buy it at $21.11, and let's say we'll sell it, let's change it. Let's sell it. We'll sell it at $20.11. So $1. $20.11. Wow, that's really far down. $20.11. That's really far down. Let's say $21.11. Instead, let's make it $21.01. Okay, about there. So if the price goes down 10 cents, now let's say we put in $100 and we spend all of our money. We spend $100 buying this stock. If the price goes down 10 cents and we have bought 5 shares, how much money have we lost? Okay, so the price goes down 10 cents. We bought 5 shares of stock. How much can we lose?
50 cents?
Yep. We can lose a maximum. We will not lose more than, we can't lose more than 50 cents. Now, are we going to win this trade every time? No way. Lots of times the price is going to go down 10 cents. We might lose this trade 10 times. But my old teacher used to say, and here's another lesson about life from trading. He used to say, if you win 60% of your trades, and every time you win, you get double your money, then you're making money, right? Because when you lose, you just lose a little. But when you win, you get double your money. I mean, if we lose here, we lose 50 cents. If we win, which would be all the way up here, if we win, we have 20 times our money. What's 20 times $100? $2,000. You lose 50 cents to make $2,000. Is this going to happen very often? No, of course not. But it doesn't have to. You could lose 50 cents again at 10 times in a day. You only have to win once. So my teacher used to say, if you're winning 60%, if you take 100 trades, you're going to lose 40 trades and you're going to win 60, probably, about, on average. But here's the key. You don't know when those 40 wins are going to come. It's not going to be lose, win, lose, win, lose, win. It's not going to be like that. It's not going to be lose, lose, win, lose, lose, win. He said sometimes, and this is true in life, if you're looking for a job, I mean, how many jobs do you need? You need one. If you're looking to get married or be in a relationship, how many marriages do you need? Like, but the point is, you only need to win one, but you don't know when the win is going to come. It might be lose, 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 win. And most people give up much before the win. They don't realize that this is a numbers thing. This is a law of averages. You can't expect to win without losing. If you trade 100 times, you're gonna lose 40 times. You might lose 30 times in a row and then win 10 times. But most people will give up long before that. They'll lose 10 times, 20 times, 30 times and be done. So what we want to do is minimize our risk. Now, I don't think the price is going to go this big of a change, but it doesn't have to, because remember, I don't need this number to be 19. I need that number to be 2. Now, here, look at this trade. If I'm going to buy this at $21.11, if it goes down 10 cents, I'm out. But, wait, can you still hear me? I need to take off my earphones.
So we can.
Can you hear me?
Yeah.
Okay. Okay, now my headphones are off. Let's go back to this. Okay, so if the price goes down 10 cents, we lose 50 cents. Who cares? If the price goes up from 21.11 to 21.23, that's not that hard. That's pretty reasonable. We'll make 100% of our money. That's what we want to do. Keep the risks really small and always trade 2 to 1. Trading is not that complicated, but it can be. If you really want to study companies and their trading sheets and financials and investments, sure, it can be very complicated, but it does not have to be. What we would need to know is what is our, change this. We want to know some basic things. So we want to know things like, and we'll do this again and again for months, how much money are we going to risk? We have to know that first. People lose money because they don't know that. They go and they buy a share of Tesla or Apple or whatever. They don't plan of how much money they're going to risk. They just think I'm buying some Apple stock, and then the stock goes down and they're like, oh my God, but they don't have a plan. So then we need to know our spot price. Spot price means what's the price right now? So we said we'll buy it at 21.11. What is our take profit target price? And we said that's 21.23. What is our stop loss sell price? And that we said is $20. Let's say it's $20.01, so 10 cents up. Now, to do this, how much money do we need to spend? Or how much money do we need to use? We're not, this is what people often make a mistake. We're not risking lots of money. We're risking 50 cents. That's what we're risking. But in order to make this trade, we might need more money. And the amount of money we need is, the calculation is, and we'll do this again and again, I don't expect you to understand today, but it's risk divided by percentage risk. So what is, make sure I'm getting this right. Our percentage risk is this number I said was important in red, in parentheses, 0.33%, that's called the percentage risk. So what is our risk? And that is 50 cents divided by 0.33. 0.33%, let me make sure it's not percent. It is percent, so make sure I get the math right. 0.50 divided by 0.33%. So 0.33% is actually 0.0033. We need to spend, to do this, $151.51. And this is where people get confused. They think, I don't want to risk $151. You're not. You're risking 50 cents. But this trade does not work. This trade does not work unless, let me make these a little bigger. Okay. This trade only works if you put in $151.51. So what does that mean? Make sure I'm right. Okay, so then how many shares do we need to buy? And the calculation is the money we need to spend divided by the price per share. So we need to spend $151 divided by the share is 21.11. $7.15. So if we buy 7 shares of stock, if we buy 7 shares, we can make this trade. My math might be wrong. I will double check, because I mean, look, this stuff is a little confusing to me too. It just takes practice to get it right, but these are really important to figure out what is your stop loss, what is your take profit, how much money do you need to use? Remember, we're not spending this money. We're using this money because we're going to buy 7 shares, but then if it goes down 50 cents, we're out. So we're not actually spending the money. But the thing is, if you only buy 1 share, this strategy doesn't work. You need to buy more, even though you're not risking the money. And that is kind of a very basic overview of how we can make money doing this, because you can lose a lot of trades and you don't need to win that many. You need to win half. If you want to make money, then you need to win half of your trades, but make this number in the middle 3. Now, you can lose 50% of your trades and still make money. Because when you lose whatever, $1. But when you win, you make $3. So you keep losing and losing and losing, but when you win, you make big money. Here, if we're putting in, $151, when you lose, you might lose 50 cents, but when you win, you make $200. So it doesn't matter. You can keep losing. That's a lot of trading. is understanding that it's not about just identifying what's a good thing to buy. Anything could be a good thing to buy. So then the next thing that we'll talk about like next week would be, how do we figure out where on this chart, how do we figure out where on this chart the price is going to change direction? So here's what I want you guys to do, a little bit of homework. I want you to get on TradingView, and I want you to choose one stock or a coin, or it doesn't matter what you choose. You can choose an equity. You know, an equity means like you can choose corn future. This is the price of corn. You can choose oil. You know, I don't care what you choose, like crude oil. You know, you can choose silver. This is the price of silver. Like, it doesn't matter. You just go here and you click it and you type whatever you want. Make sure you're on all. I mean, you don't have to be, you can do whatever, but like I use all. So then if you want to use silver, here's what I want you to do. Two things. Start at the weekly. And every time there's a big, start at the weekly so you can get a lot of information on one chart. Going back, whatever, however many years you want. Whenever there's a big change in the direction of price, draw a line. So like this is clearly a change in the direction of price. It went all the way up to this price, and then it changed direction. Here's another direction in price. It went down to this price, and then it went back up. And then it changed direction again at about this place, and it went back down. And it went back down to a similar place. If it's similar, you don't need to really make two lines. You can if you want, but you don't have to. Then it went up. This is a maybe something, I don't know, but it went back up. I wouldn't really draw another line, or maybe I would. It went up to that price, then it went down to this price. This is what you're doing on a weekly chart. You don't have to do every single candle. You just look at the places that a bunch of candles, either there's a really big change in price, like I wouldn't do here because it was still going up, but down here, definitely. And then you just go left. You just look left and you keep drawing these lines. Okay, do that on the weekly in one color. I don't care what color, it's up to you. Yeah, it's up to you. For me, I've been using, I think I use green for the weekly. And then I want you to go to daily. And I want you to do the same thing, but choose a different color. And when there's a big change, let me change the color now. I'll use blue. So on the daily, actually, let me change that to orange. On the daily, when there's a big, whenever price sort of changes direction, it came up and then it goes back down. Price was going down. I mean, that's close. No, that's not the exact same. When price went down and then boom, it hit this and then came back up. Price went down. Oh, here's another one. Price went down to here and went boom and came back up. Here's a little boom over here. And then boom, it went down. I already have that. Boom, it went up. That's all I want you to do for this week. Pick two colors, choose any stock. Now, the reason this looks very busy, of course, there's a lot of lines. How do you look at this? But the fact is, when we're trading, we're not using a daily always. We're using like a 1 hour. Now, on a 1 hour, this is very valuable information for us, where these lines fall. I mean, like, look at this line. There's something going on here. This like, it stayed at this line for a while, then it couldn't cross over this line, then it couldn't cross over, then it crossed over but couldn't make it, then it crossed over to the next line, and then back below, then it couldn't cross this line, then it crossed to the next line, then it couldn't cross this line, it stayed at this line. I mean, If you were just using these lines, you could have made money. Why does that work? This is called technical analysis. Do you need to know what company this is? No. Do you need to know what they sell? No. It doesn't matter. Why do these lines work? I don't know. We'll learn about it, but I don't know why they work, but they do. These lines mean something. And what's more important maybe is that all of Wall Street is using them. And if all of Wall Street is using these lines, we should too. We should understand, because they're looking at the lines and they're thinking, oh, good, buy here. Oh, good, sell here. That's what they're doing. So we have to know what they're doing. So that's your homework for this week. Pick any stock or commodity or coin or whatever. Draw those lines on the weekly and the daily. Use different colors. If you have questions, just message me on WeChat. Any other question?
Yes, sir, I have a question. What do you mean you don't know what the line means?
I mean, I don't know why. I don't understand why, and nobody seems to understand why in this company or silver. For silver, why is 25,423 such an important price? I don't know. Why is, let's go back a little bit and look at some other important levels. Like here, this 25.296, or here's an important level. This level down here seems to be important. This 25,744, the price keeps hitting it and it keeps not going through. Look at how the price dances between these two lines. I mean, what is going on? Why would the price stay between these two lines? That's all the way from June 17th to July 21st. So from June to July, for a whole month, the price was just dancing between these two lines. Why? Now, you could say that's just coincidence. That's just, hey, David, you drew the lines. You could have drawn the lines anywhere. But you saw me draw the lines. I just picked the key places that it turned. And if you go back in history, now let's look at a weekly chart. You see most of the lines we drew were right in the middle. There's lots of other places this goes. But look at just these two lines. We're talking about between September 2014 to July 2020, that's 6 years. For 6 years, the price somehow stayed between these two lines mostly. Why? It doesn't even make sense, but it works. And so we want to know where these lines are. Now, it doesn't mean that we're just going to automatically buy or sell at these lines. This is step one. Step one is identify these lines. Now, once you've identified these lines, let's say you've identified these lines and you see the price comes down. The price comes down to this level. And you want to know, should I buy or should I sell? Now we're at step two. Step two is not about these lines. Step two is about other things. For example, let's put on step two is about looking at things like this. So now, let me change this. Well, just for example, these are different indicators. They tell you different things about volume, about why people are buying or selling. They tell you all kinds of different things. And that is what we look at to decide, okay, price is between these lines, should we buy it or sell it? Right? If the prices come down to here or something, should we buy or sell? Now we're going to look at other stuff. But that's step two or step three. Step one is forget about all these other things. only think about the lines. The only thing that matters is these lines. We just have to start there. Cool.
Yes.
So I will post this video. I'll make a YouTube link just like for my classes, and I'll put it on the trading club email. And I'll also give it to the office in case other students want to join or whatever. And we'll talk on WeChat about next week. Are we going to meet Monday or Wednesday? I think Monday might be better.
Okay.
If you have any questions. And don't get overwhelmed. At the beginning, it's so overwhelming. There's so many charts and numbers and lines, and you read stuff and it makes no sense. Trust me, it's not that complicated. It's like 4 steps. Step 1 is just draw those lines. That shouldn't be that hard. Don't do anything else, and then we'll get to step 2.
Okay.
Cool. I'll see you guys next week.
Thank you, sir. See you
Bye.
next week.